This LOS is analyze and compare the financial statements of companies, including companies that use different inventory methods. Okay, now we're going to go through a series of practice questions. It's like an item set because we're going to use the same data and then we're going to ask a series of different questions. So I'm not going to read through all the numbers, but we can see here on the left-hand side we've got a balance sheet. On the right-hand side we've got an income statement. It's for a company called Carp, and it's for 2008 and 2009. In this case, they're putting 2009 on the left-hand side, 2008 on the right-hand side. And then they give us some notes to the financial statement, which are very important. They tell us that the LIFO reserve as of 31st December 2009 and 2008 are 155 million and 117 million respectively. So the reserve has been increasing. The effective income tax rate applicable for 2009 and early periods is 20%. Okay, so the first question is, if Carp had used FIFO instead of LIFO, the amount of inventory reported as of 31st December 2009 would have been closest to A, 465 million, B, 658 million, or C, 775 million. Actually, this question is not too difficult. The inventory under the FIFO method equals the inventory of the LIFO method plus the LIFO reserve. So it's asking here for 2009. We've got information on the LIFO reserve. I circled it here, and I've circled the inventory here. It's only two numbers that we needed. So all this other data, it's all red herring data. And that's the issue when you're getting into the item sets in level 2, is that they give you tons of data, and yet the calculation that you're asked to make is only using two numbers. It's easy. It's 620 plus the 150 million, 155. So the correct answer is C, 775 million. So again, that's coming from our previous chart. The inventory under the FIFO method is the LIFO plus the LIFO reserve. There's the LIFO reserve given in the notes. And there was the inventory. Make sure you pick the right year, 2009. And a fairly easy question to start with. So again, using the same data, I don't need to go through it, but the question is different. If Carp had used FIFO instead of LIFO, the amount of cost of goods sold reported by Carp for the year ended 31st December 2009 would have been closest to A, 2,056 million, 2,173 million, or 2,249 million. Again, this question is not so bad. We know that the reserve was increasing, so it wasn't a LIFO liquidation. So the cost of goods sold under the FIFO method is the cost of goods sold under the LIFO method, which we've got here, okay, minus the increase in the LIFO reserve. I've told you that's the change. We've mentioned that before. So we're going to see that the cost of goods sold is going to be the 2211 million straight off the income statement minus, and it's the change, the 155 minus the 117, so we get 2173. The correct answer is B. Again, that question's not too difficult. We needed to use the notes to the financial statement to see the change in the reserve, and we needed the cost of goods sold. Again, all this information here, red herring, we don't need it. We need to zoom in on what I put the green box around it. The more you practice, the quicker you get. These questions look a little bit intimidating at first, but as you roll through them, you see, aha, they're quite easy. They're not all that bad. Okay, another question based on the same data. If Carp had used FIFO instead of LIFO, its reported net income for the year ended 31st December 2009 would have been higher by an amount closest to A, 30 million, B, 38 million, or C, 155 million. Okay, this question, they just put a little bit of a spin on it because it said it would be higher. They're not asking the amount, they're asking higher. But anyhow, you would figure that out because when you do your calculations, you would know that it's the difference. So first of all, the net income under the FIFO method equals the net income over the LIFO method plus the increase in the reserve times 1 minus the tax rate. Again, in previous LOS, we've looked at these formulas a couple of times. So we have to zoom in on the net income for 2009. Under the LIFO method, it was 247. We're going to be adding, it's the change in the LIFO reserve, okay? It's the increase, it's the change because we're still on the income statement. So 155 minus 117 is 38, and we're going to times it by 1 minus the tax rate. The tax rate was given to us. Again, so we're not using a lot of information. There's one number from the income statement and the change in the reserve from the notes, and we needed the tax rate. And so we would have had 277.4 million would be our net income under the FIFO method. But this was looking for the change, so it's pretty easy. We just had to take that 277 and minus the 247, and that's the difference. And therefore, we're going to be closest to A, the 30 million. It's 30.4 million. Okay, so that one's not too difficult. Again, the formula you need to remember, net income under the FIFO method is net income under the LIFO plus the increase in the reserve, the change in the reserve, times 1 minus the tax rate. So again, like a practice set, using all the same data, but this question is if CARP had used FIFO instead of LIFO, CARP's retained earnings as of 31st December 2009 would have been higher by an amount closest to A, 117 million, B, 124 million, or C, 155 million. Okay, for this question, we had to zoom in on the retained earnings because that's the difference that we're looking at. And then we had to remember that retained earnings under the FIFO method equals the retained earnings under the LIFO method plus the LIFO reserve. We're not looking at the change now because we're on the balance sheet and it accumulates, times 1 minus the tax rate. So the LIFO reserve, 2009, they gave us, it's the 155 million, and the tax rate is the 20%. So I circled in green boxes the information you need. So it's fairly easy. It's the 787 million plus the 155 million, the LIFO reserve, times 1 minus the tax rate, we get 911 million. But again, it's looking for the higher by, the difference. So you're going to have to do your 911 minus your 787, and that's going to equal your 124. So the correct answer is B. Again, this question at this point, if you've been going through all the LOS, should not be too difficult. Again, it's pointing out the fact that you have to memorize these formulas for how you adjust for the cost of goods sold, how you adjust for inventory, how you adjust for net income, and how you adjust for retained earnings. And it's not too difficult if you practice it a little bit. Another good practice question. This one, there's no calculations, but it's looking at a ratios and asking if it's going to be most likely higher or lower. So in this case, the same data again, but if CARP had used FIFO instead of LIFO, which of the following ratios computed as of December 31st, 2009 would most likely have been lower? The cash ratio, the current ratio, or the gross profit margin? Okay, I like this question. It really forces you to think. The correct answer is A. So let's read why. The cash ratio, cash and cash equivalents, divided by the current liabilities would have been lower because cash would have been less under FIFO. CARP's income before taxes would have been higher under FIFO, and consequently taxes paid by CARP would also have been higher, and cash would have been lower. So I put that in bold and I put it in red. It goes back to the impact of taxes and cash flow. There's no impact on the current liabilities. Both CARP's current ratio and gross profit margin would have been higher if FIFO had been used. The current ratio would have been higher because inventory under FIFO increases by a larger amount than the cash decreases for the taxes paid. So that's an important point. That's a nice, this is an important slide, okay? Because the cost of goods sold under FIFO is lower than under LIFO, the gross profit margin would have been higher. So this is, I'll give that a 5-star question. This is an important one. It's not something that we've seen too often with our practice. And down to the last practice question for this LOS and this practice set. If CARP had used FIFO instead of LIFO, its debt to equity ratio, computed as of 31st December 2009, would have A, increased, B, decreased, or C, remain unchanged? Okay, the correct answer is B. If CARP had used FIFO instead of LIFO, the debt to equity ratio would have decreased, okay? And the reason is no change in debt would have occurred, but the shareholders' equity would have increased as a result of the higher retained earnings. So again, this is the last slide for this LOS, and once again, I included this chart, which why we've seen it so many times, it's so important. We can see here that when prices are rising, and we could see through this item set that the LIFO reserve was increasing, so prices were rising, inventory units were being added, that in that case, under FIFO, we had the lower cost of goods sold, and we had the higher profitabilities, okay? We had the higher taxes, so we had the lower cash flow, so that was important to understand. But because we've got the higher net income, we've got the higher retained earnings, okay? So our equity is going to be higher. So debt to equity, our equity is higher, which means the ratio is going to come down. So again, this chart was extremely important. It helps us go through the differences between the profitabilities and the impact on the different ratios. Make sure that you write out the ratio debt to equity, look at your numerator and denominator, draw your arrows. Equity is higher, so the denominator is higher, which means the ratio is going to come down or it's going to decrease, okay? Don't try to work these all out in your head. That's my, I've mentioned that exam tip before. Write out the ratio, indicate what's happening to the numerator denominator. Sometimes I even put in some numbers to play with it. And you don't want to make any unforced errors. And that's the last slide for this LOS. Thank you.